speak once to try if it works?
Sure.
Okay, good.
Did it work?
Thank you. It works.
I can't hear anything, but...
No, we heard you.
How can inclusive microfinance make a difference in perspectives? Okay, in people's life. Okay.
Those were the three already.
Look, Chris is just next to you, so that's easy. So, Chris, this is Flavia. Relevant. So this is not new she has, because she will be really talking about the she works for MFI in Uganda. So she can talk about how partnerships work and examples of roles for microfinance and disabled people's organizations. So the idea was trying to close you that she would love to study,
That's right.
journalism and what's the motivation?
No, when you're nervous, you don't communicate well. Yeah, but also in the end, you learn that every session has to end. So there is no point, whether you're nervous or not, it will pass and go. So better you calm down.
Just stay calm.
And okay.
Is everything okay with the movie and stuff? You know?
The movie?
Movie is all okay? You know?
I don't know, I think that's what ends up.
Yeah, okay.
Always, my English again, and always, but we are just,
Yeah.
it's not possible for Windows with
No,
this.
but you can take him always in the picture. He will do a little edit. I mean, he is always.
What?
As you wish, you can take him always in the picture
Always in the picture.
with your camera.
Yes, but just in love.
No, here. Or what? You take him in the picture like this always? Or? what do you mean?
Yes, but just one second. Maybe Diana.
Lapel clip? Or like a lapel? No?
I just hope it is close enough.
Good afternoon. What time did we start?
I'm just going to jump back here and do that.
What time do we start?
Again.
I'm just talking so that you can
do I hit
check
arrow
to
down?
see if you can hear me.
Not down, on the left, right?
All right, good.
Right.
This is the first line when you show the video.
No, I think...
No? Okay.
This is no problem. I will sit still. I don't move.
Okay, super. Sorry, huh?
Doesn't matter.
Difficult.
It's okay.
Okay. I look with my Donc ça c'est le plan que je sais avoir avec tout le monde évidemment, mais c'est pas très... Ok.
Tu sais faire un plan un peu plus serré et on va lui demander de s'avancer
Oui, oui.
et qu'il regarde toujours la caméra.
Mais je veux dire, ça veut juste dire que je vais plus bouger quoi pendant tout le
Mais,
truc.
oui, voilà. Et le monsieur doit venir ici.
Ouais.
Monsieur doit venir un peu plus près pour qu'on voit la personne derrière lui. Et il faut qu'il regarde en permanence la caméra.
Oui, non mais plus
Plus par là. Plus par là. Encore.
Je sais qu'il y aura une personne en plus.
Tu sais pas
là,
t'asseoir,
donc
tu sais pas te mettre là. T'asseoir là.
J'ai déjà demandé mais il y a deux personnes.
I can sit anywhere.
Do you mind? And we can move the camera a little bit more to the center. Thank you. So we have a last minute request to accommodate for Timothy's situation. Okay.
Women in the middle.
Very good.
I can't show him and the other people being here.
Yeah. Ah, okay, good. Okay. Okay. Okay, I have helping development partners contribute to foster the development of inclusive. You got, okay. Good, good. Yes, right. Actions, yes. So we shouldn't be too fast. Are we,
Yeah,
It's the only place available. Maybe yours. Ah.
Mais comme ça, il est descendu.
Oh.
Okay, do we have sound? Yes, we do. Welcome, everyone, to the European Development Days panel on making finance work for inclusive development. We will, of course, be talking about finance, and what's important is that we will try to apply that in very concrete ways. I don't know if you read my bio, but I am a talk show host on Euronews. I usually only have 10 minutes to do this, so I have the luxury of 90 minutes. But I will try to keep the answers to 25 seconds or less anyway, so we can move along and also get you involved. If there's any time you want to jump in, throw your hand up, let's get involved. Also, because we will be talking to people around the world, hopefully, we are streaming through the European Development Days, and if there are any questions that people would like to tweet, if you're too embarrassed to talk from here, you can still tweet on hashtag EDD12 and hashtag finance. Did I say that right? So let's get started first. To get your feet wet, what we'd like to do is to show you an example of how technology helps in the developing world. Again, my bio says that I was out in the field in a number of developing countries. I've seen it. It is a daily emergency. And there were times when it became to armed conflict and mass migration. It is a daily emergency we're dealing with here. And hopefully, as a group, we can try to discuss ways to deal with that and to help those 2.7 billion people around the world who don't have access to basic financing, and more than 1/3 of them are disabled. That's a lot of pent-up energy that we can facilitate. Let's see what we can do. Where's the video?
One more.
No. Lorenzo, where's my video? No.
Oh, here. So we can watch. Yeah. Good.
Banks in India face a number of challenges when serving low-income customers. They are often illiterate, live in remote areas removed from a bank branch, and are costly to service given the small size of their transactions. Unbanked, these customers face greater difficulties accessing credit, building savings, or managing uncertainties such as sickness or financial shortfalls.
I used to keep what I earned in my pocket, which I would easily spend. Sometimes I would deposit money into my relative's account, and when I needed some, I would have to ask them for it. It was very inconvenient.
Since 2006, IFC has partnered with technology firm Fino to deepen financial inclusion for India's poor. Fino addresses the challenges of conventional banking with biometric smart cards and mobile point-of-sales terminals that facilitate reliable, low-cost transactions between financial institutions and bottom-of-the-pyramid customers.
Because of this card, I don't have to go through time-consuming documentation. It works with fingerprints, so it is even safer than an ATM card. And I get everything at my doorstep. The agents come to me so I can check balances, transfer funds, make deposits, and withdraw cash. I didn't have a bank account or a record of my money. I would use couriers to transfer money, and it was always late and inconvenient. Now with Fino, it is transferred in less than 24 hours. It's obviously better than what I faced before, but I still think the transfer time could be faster.
Ready access to banking helps the poor invest in themselves and improve their livelihood. Although Fino has built a strong customer base at the bottom of the pyramid, even expanding the smart card system to link with microfinance institutions and government transfer programs, it still struggles to migrate customers from regular savings to additional financial products like insurance and mobile banking.
Now the challenge remains is of educating the customer. There is a big need in the country on insurance. So we are doing a lot of effort in terms of financial literacy of our customers and of our bandhus.
IFC continues to support Fino's efforts enabling financial institutions to better serve underbanked populations in India.
I didn't deposit my money before and I spent it unnecessarily. Now the agents from Fino come here and collect my money. They are only a phone call away. The system is very safe, so I know my money is in good hands.
Mike? So that was not meant to be just a presentation of IFC. This is just one example, and we have a panel, of course, of many different organizations that are involved, and so we want to expound on that. That is just one example of how you can apply technology and financing to try to provide more access to some of those 2.7 billion people who need basic finance. How can we expand on that? What we'd like to do in this next hour and a half is to set the stage, to discuss the issue, what are the problems that we have to, what are the barriers that we got to break through? And then the second half of it is going to be what we call digging out. Try to dig out of that problem, and what tools can we use to get out of to break through those barriers. And we'd also like to get to Q&A as quickly as we can. So if anybody has a question, please rise up. As I said, this is streaming through the whole program. You can see this online. This is a hello to all those who are watching it streaming. And there are a number of co-organizers to this. Is the UN CDF, the IFC, the IDDC, and the MPF. Let me introduce you to all of our panelists, starting with we're going from left to right. Roberto Vellutini, who is Vice President for Countries with the Inter-American Development Bank. Next to him is Klaus Rudischhauser, who is Deputy Director-General of the Directorate-General for Development and Cooperation at the European Commission. He is also in charge of EuropeAid. Next to him is Imoni Akpofure, who is Director of Western Europe for the International Finance Corporation, the IFC. And next to her is Charlotte McClain-Nhlapo, who is Coordinator for the Office for Disability and Inclusive Development for USAID, the United States Agency for International Development. And there is also Flavia Bwire, who is Program Coordinator, Microfinance and Disability, the Microfinance and Disability Program for the Association of Microfinance Institutions of Uganda. And finally, next to me is Henri Dommel, who is Director of the Financial Inclusion Division of the United Nations Capital Development Fund. Welcome all of you to this panel. Let's get quickly to the questions, starting with Klaus. Klaus, could you tell us, how does the European Commission see the issue of financial inclusion? What kind of tools, means, does the Commission have to attack this issue?
Well, first of all, obviously,
closer to the mic.
We absolutely share the need to extend financial services to the parts of the population that cannot fully participate in the financial system. So our range of instruments comes from the very large credit finance opportunities to support to small and medium enterprises, and all the way down to the most vulnerable populations. And in fact, we are amongst the biggest grant funders of microfinance schemes. So we have a huge array of schemes ongoing, more than 120 projects at this very moment, which can be funded and which are funded from very different instruments that we have at our disposal. We use our instruments which we have for non-state actors. We use it in the area of food security. We use it in the area of human development. So we take all our different instruments to actually promote microfinance.
Where do you see microfinance most effective? In which sector? Or is that possible to say?
I think it's most effective in sectors where people can have very small economic activities, small-scale economic activities, and this can be across the board. It can range from agriculture to provision of services to anything. And I think we should also not forget something which is not often coming up in the discussion about microfinance, and that is remittances. I think we should discuss it at the same time, and we have also been very active in trying to promote the transfer of remittances to the people from the diaspora, to the people living in the country, because it's a very important, it can be a very important complement to microfinance. So I would like to just flag that as an additional issue that we might want to touch upon.
Okay, very good. Imoni, let me ask you, we're talking also obstacles. There's microfinance, but there must be obstacles to that, right? How do you accelerate progress toward financial inclusion? How do you overcome those issues?
Thank you very much, Chris. I would say that I'm going to focus on access to finance for SMEs, but I can almost use it as a proxy for the similar issues with other vulnerable groups. According to a recent IFC and McKinsey study, we estimated that between about 45 to 55%, that's about 11 to 17 million, of formal SMEs in emerging markets do not have access to formal institution loans or overdrafts despite their need. This gap is sort of as a result of the mismatch between the needs of the small firms and the supply of financial needs. Most banks are much more comfortable lending to larger firms. Smaller SMEs don't usually have a kind of credit rating, know your customer, and the anti-money laundering requirements now make it much more difficult for SMEs. Additionally, we've observed that non-financial barriers to SME development exist, such as, SMEs often cite the lack of infrastructure. Power is a basic need. How can you make sure that your company is financially sustainable if you can't even have power? And then when we look at financial inclusion, it's not just about SMEs. Households as well face huge barriers to accessing financial services due to issues like financial literacy, not just basic literacy, but when somebody goes to talk to their bank, do they understand the issues? And then also just in terms of physical locations, hard to reach areas such as the urban peripheries or rural villages. And this is where, as you saw with FINO, technology can play a significant role.
You mentioned households. Let's go over to Roberto and expound on that, the issues that households face in trying to overcome this financial exclusion.
Right. Thank you, Chris. Just give you one piece of information on Latin America. Only 30% of the households have bank accounts, and less than 8% of the people of the households have ever taken a formal bank loan. So that shows how the problem is. We see in Latin America two types of barriers for the financial inclusion of households. On the supply side, we have, first of all, we don't have tailored products for the low-income groups. We have a high cost of providing the services if you start going to rural area because of infrastructure deficiencies, or in urban areas there are more violent areas. So there's a high cost of providing the service in these locations. And also the screening is different than the banks are used to. So that creates a wedge between the supply and the demand. And on the demand side, we have identified sometimes social barriers or psychological barriers for these people to actually go and to a bank and ask for a loan. I think the main reason for us underlying all this is what for me is, or for us is a large barrier is the informality. Informality in the labor market that leads to informality in the credit market, because without the access to the formal market, they have to rely on informal credit markets, which are more expensive, etc., even though these people have a steady income stream that if they have a credit commensurate with the repayment scheme, they will be good credit subjects.
Okay,
so,
let's jump over to Henri. And what actions should governments take in the role as facilitators of financial services for the poor?
Thank you, Chris. I think, governments still need to fulfill a number of key functions, which include ensuring macroeconomic stability. I think there is nothing worse for poor people than erratic policies or high inflation. We know how it can destroy savings. I think they need to continue to enforce effective supervisory system to ensure that poor people's assets are safe, savings are safe. Avoiding distorting policy, we have seen how well-intentioned interest rate ceiling policy can have an impact in limiting access, at the same time of discouraging saving. Now, at the same time, I think it's very important for government more and more to be involved in implementing effective and strong client protection and responsible finance policies. As the field is expanding, also to start to provide more market information about financial inclusion, or be more proactive around financial literacy. If you give me one more minute, Chris, I think what's interesting now is we see a huge kind of development of innovation around delivery channel with mobile money, with cell phone banking, with innovation around agent banking. And here, it puts a number of new challenges for government. The first one is basically to balance what is required flexibility to enable new business model to emerge, but at the same time certainty to make sure that you ensure policies which protect poor people's savings. And a very specific, you were asking me what specific action should government take in this kind of environment. I think one is avoid doing policies which try to create a certain outcome. We have seen in certain countries, again, well-intentioned policy, which is that any money operator, mobile money operator, needs to have 4 or 5 bank partners, or that agents is only allowed in rural areas and non-urban areas. This can really stifle innovation and kind of kill the incentive for new players to come into that field. So, as a rule, flexibility but certainty around the security of poor people's deposits.
Okay, Henri, you're talking about some issues on the ground. There is technological advancement, but you also have to, as a government, you have to make sure that poor people are protected. Exactly. Let's switch over to Flavia, because you see on the ground what's going on. How do you put that in perspective with what Henri just said about the fact that you got to protect poor people, even though you have these technological advances, you have to make sure that they're being done right. Is that right?
All right. We know that poor, vulnerable people have a lot of potential that can be unlocked if they allowed access to inclusive financial services. A potential in having bigger production, a potential in improving their economically generating activities. And this access to services could also help policymakers and other stakeholders to decide what they can do in terms of improvement of service delivery, because when you work with them, then you get to know what really is needed. It could be technology, it could be different products, and I think that could fit in very well. Then also we know that their access could complement a lot on their already existing resources that they have, because we know that vulnerable and poor as one may be, they have some resources. It could be the human capital, it could be the experiences, and inclusive services could complement on these to better their livelihoods.
Charlotte, let's go over to you. And how do you give the aspect of the disabled in the developing world? It must be a compounded issue and other barriers to deal with.
Well, Chris, I think one of the important things is for us to understand who the poor are. and who the vulnerable are. Because often we hear the word the poor or the vulnerable. And within that, we often don't see any deliberate and specific actions to reach people with disabilities. And if we're talking about inclusive financing, there have to be specific and deliberate activities to reach a group of people, a population that makes up 1 billion of the world's population, that are typically ignored and absent from these programs. So I think for me it's really important, and for people with disabilities it's really important for us to have a better sense of who we're talking about when we talk about the poor or the vulnerable. That umbrella, the vulnerable, has a tendency to assume that you're including people with disabilities, but not necessarily making the necessary actions to reach that group.
What is a specific barrier, since we're talking about setting the stage and looking at the barriers, what is this one specific barrier that disabled people face that other poor don't?
Well, I mean, I think one of the specific barriers is that of, for instance, physical accessibility. I use a wheelchair. If I was trying to access services and services are in a building with steps, I would not be able to access those services. So physical accessibility is very important. Right. But there are many other barriers. There are also barriers around social barriers. So the kind of prejudice that people have as a stigma is a really strong barrier that prevents people from disabilities from accessing financial services.
And yet 1 billion people are, many of, or most of them could be very productive if they had that chance.
Absolutely.
So it's not a matter of giving them a handout, but giving them a hand so they can be productive.
And I think there are enough examples globally to show that people with disabilities want an opportunity. People want to be part of the society. They can be productive citizens. And it's about leveling the playing field so that, you know, this 1 billion people and their households can actually be part of society. And I think, as I say, there are many examples. Flavia mentioned a couple, but there are many examples that point to this.
Okay, and I might point out that most of us on this panel, most of our organizations are part of the consultative group to assist the poor. And in fact, in essence, what we're doing now is we're pulling you into this consultative group. And does anybody have a question that they would like to pose now that we've all given a bit of a tour de table? Can I throw it out to anybody out here? Does anybody have a question? Yes. We have the microphone? Okay.
Hi, here's Ingrid from the World Future Council. I would like to know, so yes, it's true what Charlotte just said. So I would like to know, so what is the way forward? So what is Mr. Dommel and Mr. Rudischhauser, what do you see? Is there an action plan which will make finance inclusive to people with disabilities?
That's actually the next step of this conversation. We're talking about the barriers at the moment. But, I mean, that's a fair question. Mr. Rudischhauser.
Well, I think, first of all, we should, when we talk about microfinance and about access for poor people or people who are, as was pointed out, are not financially literate, we have to make sure that we have an approach that covers all the questions that are involved. Microfinance has come under a lot of criticism recently, and we have to protect it from that, because obviously we want it to work, we want to use it, but we have to protect it from the criticism. And one way to do that is to develop a responsible financial sector, a banking sector, which is actually capable of having microfinance schemes which do not lead people into problems. We all know there have been problems, so it's not just a question of giving people access to money, it's a question of advising them, of making sure that they can actually make proper use of the money. Otherwise, the criticism will come up again, and we will even be accused of putting people into problems.
So it's not, yeah, you don't want the image of it being loan sharking. And let's go over to Henri, because you did make mention of that governments need to be active in ensuring that this is done fairly.
I think everybody agrees that, you know, after what we have seen in terms of excess of microcredits and issue of over-indebtedness, ensuring client protection, responsible finance principle is important. And I could say that for UNCDF, we are member of the steering committee of the Smart Aid campaign, and which is actively supporting the implementation of client protection principle. But I think to answer your question, Ingrid, first, I think now we have a tremendous opportunity with this huge emergence of innovative way to provide access to financial services. And that's basically the revolution around mobile money, agent banking, which really bring financial services as a doorstep of every single person, including in rural areas. I think what's important is to recognize the variety of financial services that poor people need. It's not only about microcredit. That's very useful for those who can really make a productive use of it, but it's really also about remittances, we talked about it, about insurance, about payments, and there is a whole kind of potential to kind of provide welfare payment actually through ways which increase the abilities of people to save, for example, instead of disbursing that in cash. I think also we recognize the importance of the non-financial activities which can empower people to make better use of it, financial capabilities, financial education, and at the end of the day, really put client at the center. I think what we heard is, when there is a focus on trying to understand clients' need, to look at the potential, to look at how to accompany them to develop fully the productive potential, then you can really have a very powerful impact. And that requires for us to really put back the discussion of client at the center. And I think, you're mentioning CGAP before. I mean, it's a very strong focus on CGAP work as well, putting back client at the center. And I think all of us in the development communities need to really, keep that in mind in everything we do.
Okay, I'd like to go. We have another question over here. Okay.
Hello. Hi, I'm Laura Jump from Development Initiatives in the UK. I was interested, one of you was talking about remittances, and something that we're looking at is other sources of aid and how that can be leveraged to assist the poor who may not be included in other programs coming through the domestic government. So we've been looking a little bit at remittances, at FDI, and other sources coming back to countries, and I'm just interested to hear if the panel have had any experience of how this can really be used for inclusive development.
Imoni, I think foreign direct investment is something that the IFC is involved in, correct?
Yes, indeed. So one of the things that we try to focus very much on is, as well as growing the local domestic private sector, is how do we work with companies that are investing in a country to really make sure that their models are much more inclusive. A couple of examples. We've got a housing project in Indonesia where a company is basically trying to grow its mortgage business, but it actually focuses, as well as the mass market, it's focusing with the government on a low-income housing program. So 50% of the bank's mortgages are less than $11,000 US. And so we're working increasingly with companies who, as well as their core business, are saying how can we be much more inclusive with a very pro-poor focus. And we've got a business of about $7 billion in that space at the moment out of our portfolio of about 40 billion. So this is something that's growing. You find that companies feel that this is business that they're not doing it out of charity. They're saying that this is a market that is being underserved, where, as Charlotte said, people want to be productive.
Roberto, you had something to add there.
Yeah, specifically respect to the question remittances. We have developed at the IDB a very successful remittances-based program through our multilateral investment fund, which, by the way, provides upstream work for the financial inclusion, like financial literacy, and essentially is a securitization of receivables for the purpose of backstopping obtaining credit. And it was very strong in Central America, of all, among other countries, and it has been a very successful program. And I can give you some more information offline here.
Okay. Anybody else like to? Yes. Okay.
Just maybe a word on remittances. I think you're absolutely right to point that out. I think it's a major source of income for a lot of people, especially in rural areas, in developing countries. And I mean, UNCDF had been actively involved in that area in partnership with the International Fund for Agricultural Development. We kind of joined a facility managed by IFAD, and which is looking at ways to improve the value of remittances for recipients in three ways. Lower cost, using some of these actually innovation around technology, increase access, especially in rural areas, and link remittances to other financial services. When you give the option to a recipient to build a savings account and not to withdraw in cash the entire proceeds of a remittance payments, that's very powerful in terms of building assets. And I just wanted to add that it's an area where, you know, I know that IFAD has been working very closely with Inter-American Development Bank, and in fact we have been, you know, following and be associated to that global agenda also in that context.
Okay, Flavia, let me ask you, because you're involved in microfinancing, and in this section of the conversation, of the discussion, we are looking at sort of the barriers and setting the stage. What other barriers are there to microfinancing? Is there maybe a stigma attached to that in Uganda? You face barriers when you're trying to expand on microfinancing?
Yes, some of the barriers that were identified before even the initiative started were barriers generally to do with the physical access, as Charlotte mentioned earlier. And the biggest challenge here is where institutions feel they don't own the buildings, and the policy there has not been so strict that each public building is made accessible. So that is quite a barrier, and when we present it to the institutions, the buy-in is there, but the commitment gets lacking, because you realize it is not only the job of the microfinance institutions, but it has to be a joint initiative with government and the policy makers. Then the other barriers that institutions, I would say, claimed was about persons with disabilities having low self-esteem and maybe not being able to come forward for the services. But we know that after discussions, we realized that the low self-esteem is partly caused by the service providers, the negative attitude, the prejudices. So the experiences they go through when trying to approach different offices contribute a lot to that. And then there are also a lot of other barriers to do with information exclusion, the design through which microfinance services are provided. And, but on analysis, you realize that these barriers can actually be worked upon because they originate more from the supply side than from the demand side.
Okay. Charlotte, how much of a barrier is there between private sector and what the government does? Or is it to what degree do you see a collaboration between private sector and government?
Well, I think it really depends on, it's very country specific. I think for governments, there's a Convention on the Rights of Persons with Disabilities that's been ratified now by 125 countries. And this convention talks about the importance of empowerment of persons with disability and the inclusion of persons with disabilities in all aspects of society. So government now has a legal obligation to ensure that persons with disabilities are accessing services, in this case, financial services. So I think government has that responsibility. Again, it is happening in some private sectors, but it really hasn't reached the tipping point. And I think the important thing is to acknowledge that this hasn't happened and start looking at ways we can begin to train the sector so that we are seeing more inclusion of persons with disabilities in the sector, because it really is a win-win situation for everybody. You've got an untapped market, and you've got a group of people that want to be part of it. So,
Chris, right.
And
Chris.
Maybe to add to that, those very important policies are there, but I must say governments have not done enough dissemination of the policies. And this is where important partnerships from the private sector are coming in, like the umbrella bodies of persons with disabilities, to complement government's effort to disseminate the policies to the entire population.
Okay. Roberto, you had something to add?
Yeah, just some of the stuff we're doing regarding persons with disability and has to do with the collaboration between government and private sector. In two countries, Argentina and Colombia, we have a programs for employment generation. I mean, it's specifically focused on the employment aspect of PWD, and is to develop means to increase the possibilities of employment for people with disability. So we see some collaboration between private sector and government, at least in those two cases in Latin America.
Okay. We have another question over here.
I'm Nadej Rich, and I work for the European Disability Forum, where I'm in charge of the ICT accessibility, so access to the new technologies. We heard a lot about the stigma and the physical accessibility as the barriers for a person with disability to access financial services. But I think the use of new devices, of new technologies, can also constitute a new barriers if we don't think about it right now. So I was wondering if you experienced that something you already encountered and thought of, or not yet. Thank you.
Thank you for the question. I was actually going to make that point because I think, you know, as we're talking about innovations and we're talking about using, for instance, mobile phones, that's great. But are we thinking about making sure that mobile phones are accessible for persons with disabilities? And again, there are a number of projects. I'm currently working on a project, beginning to work on a project in Kenya with Safaricom and M-Pesa, where we're really trying to ensure that the use of mobile phones will address issues around accessibility. Because if we can address it, they're excellent tools to reach a population that is often unreached. But you need to make sure that, for instance, you know, your mobile phone can be used by somebody who's blind. You need to make sure that all of those accessibility features are present. So I think innovation is great, but innovation needs to take into consideration the issue around accessibility.
Okay. Imoni, let's talk about what barriers there could be for the private sector to get more involved in development and in providing financial services for these 2.7 billion people.
I think that again, one of the things that we have to remember is that when we're looking at being more inclusive, there's a role for government, there's a role for private sector. And so the government is very much about setting the regulatory environment, as we said earlier. The private sector is really focused on providing a return to their investors, while obviously being socially responsible and a good corporate citizen to the environment in which they live. And so it's a very difficult balancing act for the private sector. One of the key roles that multilateral development banks and other agencies such as the European Commission, one of the key roles we play is to really help the private sector articulate the business case for being involved broader than their core business. So I've given you some examples. Fino is a very good example of a company that said, we can use this biometric method to actually provide access to people who are not literate, who are in rural areas, who don't have the physical accessibility. And they are making money from this. So private companies can do that, but we also have to be able to help them shift the mindset, which is something that is sometimes difficult because people tend to stay in their comfort zone. So as well as operating in a place where the regulatory environment encourages companies to think broader than their core business and to think a bit more exclusively, you also have to work with the culture of the organization. And we find that companies where you have a leader with a vision actually do much better. And then when they're there, they find that they make money.
How can we measure the development impact of achieving further financial inclusion? The impact. How do you measure the impact?
Well, we measure it in a couple of ways. For us as IFC, we're measuring it very specifically on jobs, but it's sort of how much are companies contributing to jobs in a country. We're much more recently looking at the quality of jobs. So it's not just about any job, but what is the quality of the job that somebody has. And for example, the World Development Report this year, jointly with the World Bank, will focus on jobs. We've just also done a study on jobs as IFC, looking at quality of jobs. Are we raising people out of poverty? Are we increasing more than the $8 a day that we're saying is the level of poverty? How are we doing that? What is the access that people are having?
Klaus, let me ask you, because I know I'm aware of the agenda for change. This is a bit of a sea change, really, I think, in the policy of the European Union to focus more on the private sector. And can you tell me, I mean, the EU wants to further focus on private sector. Do you see a larger role for financial inclusion in the next programming cycle? Will that play a bigger part?
Well, that's a complex question. Let's start by putting the emphasis on the private sector. Why have we proposed that? Because obviously, I think there is no secret about the fact that economic growth, and in particular inclusive and sustainable growth, is going to be one of the key factors to overcome the MDGs, to attain the MDGs. I think we have to sometimes remind...
Millennium Development Goals, if somebody doesn't know.
Sorry. I think we sometimes...
Try to avoid the alphabet soup.
Good. I think it's sometimes useful to remind ourselves that the deal was not we define Millennium Development Goals and then we throw a lot of ODA at it and the problem will be solved. This was never the deal. It is clear that development assistance has to play a very important role. But countries, our partner countries who have jointly agreed these development goals, have their own role to play. And one of the biggest roles for countries to play is to ensure economic growth. And that only goes through the private sector. You don't build growth just with public funds. And that is the reason why we have put the development of the private sector in the front line now of our development policy. And we are just drawing the conclusion from the experience we have over the first 10 years of trying to attain the MDGs. So we are shifting a little bit the focus. We will still continue to work directly addressing individual Millennium Development Goals when it comes to water, to sanitation, to health, access to health services, etc. We will obviously continue to do that. But we will, in addition and much more than before, try to promote development of the private sector. I'm talking here about the local private sector. I'm not talking about giving money to international companies to go and exploit our beneficiary countries. Let's be clear on that. But then, and that brings me to reply to your question, what can we do to actually promote growth and to promote the private sector? And one very important element of that is, for example, to make sure that the countries develop a capable banking financial sector themselves, that the private sector operators have access to money, to investment funds, and that in the whole range, again, all the way down to the smallest, let's say, agricultural enterprises or individual farmers. We have to cover the whole range because that's where we then get bottom-up growth in our countries.
Is that where you're going to depend on the people, on Imoni and Roberto to do that? The development banks of the world to help you do that?
I mean, we always... I think both institutions have a strong private sector arm precisely to complement the work on the public sector. I think the trick is not so much only relying on the private sector, but how you can leverage public sector funds through the private sector to leverage their potential. And also, what do you do with public companies, for instance? I'll give you one example related to financial inclusion. There's a Colombian company called Empresas Públicas de Medellín. It's a very well-run company. It's public. They took a loan from the IDB from the one initiative we have, which is called Opportunities for the Majority, for $10 million to own lend to approximately 1.7 million of their employees who had no access to formal financing. but were the customers who have always paid their bills. So they have a credit record with the company, not with the banking system. So decided, so I know them, I'm going to lend to them. So you see some also corporate social responsibility in the sense of they weren't obligated to do that. They did it because it was something that was missing from the market. So you see both the complementarity. This could have been done by a private company, like in the case of the IFC. But you see both ends, and I think for the multilateral banks, the trick is how you leverage both sides, one to complement each other.
Okay. I think we should move on now to digging out. What do you think? Shall we do that? Do we have a question? Yes, sir. Please give your name, of course.
Yes, my name is Paul. I work for Right for the World in the Netherlands. I have one question to the panelists regarding the barriers. I'm just wondering, to what extent are the investors of these microfinance institutions and financial incentives or institutional incentives given to the management a barrier to inclusive services or products that are given by these companies?
Okay, who would like to answer that?
I did
this
question
Could you say your question again?
Yeah.
They didn't quite get it.
No, I think I'm. Yeah.
You get it?
I had two. The first one, to what extent are the investors of these particular microfinance institutions a barrier to inclusive services and products? And to what extent are the incentives given to the management of these microfinance institutions also a barrier towards inclusive products?
The incentives as a barrier.
Just to give an example,
yeah.
If as a manager, at the end of the day, I'll get a bonus if I bring in 1 million profit. If I focus my product to the so-called poor and vulnerable, to what extent am I able to meet that? That's my question.
Okay, let's start with Klaus.
Well, let me give you a try at this. I said before that you cannot compare microfinance to normal banking services as we would know them in developed countries, where people basically know how to work with loans. They know they have a stable income, and so they can normally service their loans. When we talk about microfinance, we talk about giving money to people who are not used to use financial services, who often don't fully understand the ins and outs. And therefore, I said before, microfinance schemes have to be built in such a way that on the management side, there is a responsibility, a strong responsibility for what is then being done on the ground. And that means that people should not just get money, they should also get advisory services. And therefore, it's not a question of making profits. And I don't think that, I think institutions that are empowered to give microcredits should obviously be under discipline. And one way for us to ensure this discipline is we provide development money to these institutions precisely for doing the thing they cannot make a profit of: advisory services, education. And so the combination of development funding and the financial part is what can help microcredit work in a proper way and keep it out of some of the dire straits into which it has gone when this was not the case.
Okay, let's go to Charlotte first.
Yeah, I mean, I think just briefly, I think the microfinance institution, staff of microfinance institutions that don't believe that people with disabilities can benefit or can be part of their clientele immediately present a barrier. So, I mean, I think that there is some work to be done there. And again, I think it's about training. I think it's about educating people that people with disabilities can and should be part of your clientele.
Okay. Flavia?
Maybe to add to that, to answer to Paul's question, a lot of incentives to the microfinance managers and staff are tagged on financial performance. Financial performance in terms of portfolio quality, and so as a result, focus is more on the profit I will make, the quality of the portfolio, and with the perceived risk of reaching out to a certain segment in society, as managers and staff, they would very much avoid reaching out to that. So I think there is need to have incentives on financial performance, but there is need also to create incentives on impact, incentives on social outreach. But yes, that presents a very big barrier on financial inclusion in the quest for excellent performance in terms of portfolio quality.
Okay, as we switch gears, you do want to answer the question, but also how do we bust through that barrier?
Yeah, I mean, maybe starting with the incentive issue, because it's part of the answer. You know, if I look at UNCDF experience, we deal with a lot of financial service providers, some commercial, you know, some NGOs. I think you can shape the incentive of institutions to pay special attention to certain issues by the way you negotiate with them. And it can be very well by giving them the resources and space to explore a certain area. You know, we're engaging with all of our microfinance partners around client protection and giving them the incentive to not only endorse the principle, but also to implement them in concrete ways. What struck me is that, you know, we probably need to do more to give them the right incentive to look at the target population with disabilities and give them the space and resources to understand this clientele segment needs, what are the specific characteristics, how to make access possible, how to remove some of the barrier that we heard. I think it's our role and responsibility as donors to shape the way we engage with those institutions in a way which lead them to address those issues. And it's something that we experience in the range of issues. You know, we are helping now microfinance to address access to clean energy and renewable energy for poor people. I think we can shape incentive around smart grants to get them to develop viable business model around that. At the end of the day, you want them to be sustainable, to recover the cost, to have good portfolio quality, but you can give them the resources and space to explore, you know, more about making certain objectives, social objectives possible. Now, I know you want to move to the next segment.
Well, I've got all the panelists jumping up and down here. Imoni, let's go to you, and then to Charlotte. Help us dig out.
So I'm actually going to be very positive because initially I think we all thought, okay, microfinance deals with the poor. So naturally, and most, when you looked at SMEs, there were a lot of women-owned businesses. So this is naturally addressing the issue. But you're very right. When you're focusing on money and making money without actually setting clear specific targets, it's easy to say you're doing good, you're being inclusive, without actually showing that you are. So a few years ago, the G20 got together and put together a global SME finance initiative, asked us as IFC to take the lead in looking at this. And the idea is to have about 200 million facility focusing both on investments, but also capacity building, awareness raising. We've put out publications focusing on what's going on in how do you strengthen access to finance for women? How do you scale up access to finance for the agricultural SMEs? We haven't done anything on disabilities, but again, it's when you realize that you are focusing on microfinance and SMEs, but you're not being as inclusive as you could be, then you can change incentives. And I think this is the way at the global level, people are working on very specific areas, and you already have groups working on disabilities. So there is funding available to actually look at targeting and providing information as you scale up and determine incentives.
And it's the role of development banks like yours, like others, like the Inter-American Development Bank, to, in a way, pave the way where some businesses fear to go.
Yep.
Right. Charlotte?
Well, I mean, really, just to pick up on Imoni's point, you know, there are resources out there. In 2006, Handicap International did a seminal report on persons with disabilities in microfinancing and found that only 0 to 2% of the population of MFIs actually are persons of the clientele are persons with disabilities. So the information is there. There are tools, there are groups. I think it's really important to ensure that whatever resources are being developed, that you actually work with organizations of persons with disabilities because they have the expertise, they understand what the barriers are. So I mean, I think that to your point, it would be great to look at developing some specific tools around that, but really to make that process inclusive as well.
Okay, anybody else? Any questions? Okay. Let me move on then to Flavia. Flavia, you had some specific examples that you would like to state of pushing ahead with more financial inclusion.
The example I have in question is the collaboration that we have between an umbrella organization for microfinance institutions in Uganda and an umbrella organization for persons with disabilities in Uganda. These two came together to create awareness on inclusion, on providing inclusive financial services to persons with disabilities. And the partnership is based on mutual benefit basis, win-win situation. It is not presented as a charity or one side benefiting more than the other. And the benefit comes in form of persons with disabilities being able to access the needed financial services, while the microfinance sector increases outreach and expands market when targeting this segment. Specifically, intervention has been in awareness raising to both sides, to microfinance institutions about the potential that exists amongst persons with disabilities, and also persons with disabilities about the opportunities that they can utilize when they work with microfinance institutions. And specifically, the two partners have different roles that were designed according to their competencies and mandate. So for the microfinance side, there is a desk and an officer specifically to do this, looking out for all the necessary opportunities in the industry to explain disability issues. Issues that many times appear obvious, but people need to be reminded. Then to follow that up, they do what I would call technical support in areas where there are various initiatives that come up from the institutions that they want to be inclusive. And the umbrella organization for microfinance institutions is the custodian of sound practice in the industry. And we are trying as much as possible to integrate disability issues in the sound practice.
Okay.
And,
okay. You're checking your translation.
Let me put a question this way. We're talking about 2.7 billion people. We've been working on this for decades. We still have this problem. We have at this table some of the biggest development banks in the world. We have a representative of the biggest donor of development aid in the world. Why do we still have this problem? Klaus.
Well, what should I say? It's because it's not the only problem that we have. I mean, let's face it, we have problems in developing countries, and that's themselves who identify these, in infrastructure, in health, in education, in agriculture, in private sector development, and in many other areas, for example, reform of the justice sector, capacity building of the government. So we can simply not dedicate all our resources to this one problem. That would be unfair to all the other people in society who also need assistance, or let's say to the countries that need assistance in various areas. So what we have to do is to find the right balance. And I said to you earlier that we are shifting precisely into this area. So we are responding, I think, to a clearly identified need, but we can also not afford, as a major donor, as it were, to simply disregard many other areas. But if I may, we are already accused by a part of the NGO community that we are disregarding the Millennium Development Goals because we now put on the private sector and on energy. So you can't win.
Is there a mea culpa from Roberto, or no, it's not our fault?
Maybe it's our collective fault, but not mine. No, seriously, I think following up on this point is you have an imbalance between supply and demand. basically. And on the supply side, microfinance, just to use this as a proxy for financial inclusion. I know it's not 100% there's a correlation, but let's assume microfinance is a very specialized segment. You don't see a lot of private capital doing this. Has its own, each location, the type of clients has its own requirements, its own cultural characteristics, et cetera, et cetera. So the amount of capital, especially private capital, that is willing to enter into this is limited compared to the formal sector. And even formal microfinance is more limited. So I think the role for us as a multilateral institution is, what is it that we can do? There's a market failure there, obviously, right? What is it that we can do? That's where we step in, as you said, to bridge this gap. So we come up with these innovative solutions, like the IFC, our opportunities for the majority, et cetera, that work, but they are very limited scope. And what we have to do is to use this as a demonstration effect to scale it up to a larger scale. But we need capital, and it goes back to the limitation of resources that we have. I think that's how I see it.
Imoni, would you like to add to that?
Yes, this is hard. I mean, that's the reality. If anybody who tells you that this is something that's easy to do is lying to you. And I think the reality is, we can see even within Europe today, when governments are trying to get financial institutions to lend to SMEs and to provide funding to private individuals, is that it is not easy to get financiers, and I'll put myself in that basket, because financiers are by nature very risk averse. So it's not easy to get us to change culture and to understand much more with a market opportunity mindset, as opposed to a risk averse, if money goes out of the door, I may not get it back. So you have to work on both sides, and this is why it's very much a combination of providing the access to finance as well as the capacity building, so that the potential borrowers also work to become better potential clients.
Okay, Charlotte, if you can tell us, how do you persuade a company to invest in disabled people? Can you give us one concrete example to showing that this is a potential gold mine if you play it right?
Right. What I did want to say was that, I think there are some low-cost and low-risk opportunities. I think having dialogue is really an important one. And here I'd like to really welcome the work of the IDDC and the EMFP that have already started at an international level, the dialogue around inclusive financial services. So that, I think, is important. But I mean, I think, to say to a company, you've got 15% of your population that's potentially a client. And what you need to do is to really make some often very low-cost changes to be able to include them. Seems to me a no-brainer. So for instance, training. And nobody's saying have a separate training on disability. You're training your staff. Include in that general training a component around the inclusion of persons with disabilities. So we're not looking at a separate stream, but we're looking at including it in what we're already doing. So I mean, I think there are some changes that we can make that really are low cost. So training, ensuring that places that you use are accessible, and the return is going to be great. I mean, we've seen that persons with disabilities, once given the opportunity, take it. And we're seeing that in countries where that access is available, persons with disabilities are contributing to the GDP. And so I think this in and of itself speaks to why we should be going this route.
Okay.
And also,
sure, Flavia.
To add to that, another way of presenting persons with disabilities is through their mode of employment. In developing countries, we know that formal employment is almost out of reach for persons with disabilities, because first of all, even going through the formal school is hard. So the majority of persons with disabilities are self-employed. And this is the target market of microfinance institutions, entrepreneurs. Entrepreneurs at all levels. They may be small today, but with the microfinance services that can complement their resources, they are really a very potential market. And when that is presented to a microfinance institution, many times they realize, oh, this is an eye-opener. We had not realized that.
Okay, we have about 10 minutes left, I think, before we do the sum up, roughly. Do we have any other questions in the audience? Yes.
My name is Yinka Abasiri. I'm from BNP Paribas. We've spoken a lot about the supply side, and I'm wondering on the demand side, maybe Flavia can help. What are the practical steps that have been taken to overcome a lot of the psychological hindrances that disabled people have that prevents them from accessing the SME programs that are available to them, apart from counseling, of course? Is there anything else that has practically been done that you could share? Thank you.
Thank you. In this particular program, we are focusing both on the demand and supply side. And on the demand side, we are raising awareness amongst enterprising persons with disabilities, because we know that microfinance is for the productive poor. And the awareness raising entails information on the operations of microfinance institutions, and also some entrepreneurial skills, training in managing a business, basic training. So all that we believe empowers persons with disabilities to approach microfinance institutions with a lot more confidence. And I would say it is working a lot. We have so many success stories of persons with disabilities that have gone through these trainings and have been able to access microfinance services.
Okay, did that answer your question? And yes, sir.
Hello, excellent panel. Thank you so much for your insightful comments. My name is Jonathan White from the German Marshall Fund, and I'm curious to know about where you see leadership on the part of African governments to address the business environment to help, as you were saying, Roberto, get to scale in terms of creating that business enabling environment, working with the financial sector, the regulators, the oversight agencies, to encourage banks, African banks, to create a set of products and services that are geared towards small and medium-sized enterprises. There's leadership by Flavia and others that is wonderful to see, but I'd like to hear where you see leadership on the part of the overall regulatory environment to really get to scale in creating an asset class for these kinds of investments.
Who would like to answer that? Ooh, don't all jump at once. Roberto.
I can answer, but not in Africa. I can answer about Latin America. But in Latin America is interesting because if you look at the banking regulations of most countries, is really segmented and allows for that kind of institution to come in. And you have self-regulation or differentiated regulation by, say, the Superintendency of Banks, and it's quite flexible in the sense of allowing a wide spectrum of types of financial institutions to operate. Obviously, the requirements are different. You know, if you're a bank, if you're a microfinance, et cetera, but at least allows for the establishment and the provision of the service. And we see it, as I said, it's quite common in at least in most of the Latin American countries.
Yes?
I'm trying to think. It's very difficult to be general because quite often what governments are doing is a gradual approach in certain key sectors. So Ghana, for example, the housing sector, they created a mortgage law that allows for extrajudicial foreclosure, which allows banks to be much more comfortable lending. They've revamped their non-banking financial institutions law as well as their leasing law. Kenya has done something similar on the leasing side. I know that countries like Rwanda and Burkina Faso are working very much on improving the overall business enabling environment, working on things like land rights. Sierra Leone, Liberia. So there are a lot of different examples in key sectors. And what some governments do is they look and say, what is a critical sector for me? If I want to focus on agriculture, so Nigeria, the central bank's created a risk-sharing facility for the agriculture sector. What is a critical sector that I want to grow, that I'm going to address an issue that is preventing SMEs to come in? We looked, for example, as IFC, at a range of countries and said, what are the issues facing women-owned businesses in these countries? And then you have a discussion with the bank, or sorry, with the government and with the supervisory, the Bank of Ghana in the case of Ghana, or the central bank in other places, and say to them, these are the barriers in the way your regulations are being enacted. If a woman needs a passport before she can, she needs her husband's permission before she can get a passport, then that is, again, going back to the access, that is an additional barrier. What are you going to do about it? And so there are a lot of little things that are being done, some bigger. I hope I've given you a flavor. It's very difficult to generalize.
And if I could just tack, I think that's, just to say that that's precisely what we should be doing around disability as well. We should be ensuring that the regulatory frameworks are, in fact, inclusive. Because we still have on the books, unfortunately, some policies and regulations that remain exclusionary.
For instance, what's a good example?
Well, I can't think of a specific country right now, but I do know that there are policies and certainly policy and legislation that do not allow for persons with disabilities in some countries to open a bank account. Those are the type of things that need to be eradicated, because those are barriers that we've put up and I think really inhibit the inclusion of persons with disabilities.
Henri, how far does technology go to bust through these barriers?
Well, it's an interesting question, because I think technology has radically changed the pace of access to financial services. When we look at the access to basic services in a country like Kenya, it really has jumped dramatically with M-Pesa, and I think we could mention a number of examples. At the same time, and what's interesting is often this increased access doesn't translate into increased usage. So it's like the full potential of what this technology offers is not always fully used. And
you were talking earlier about financial literacy. Is that what you're talking about?
And I think exactly. I think it shows that to really fulfill the potential of what the technology offers, which is truly revolutionary, I think it needs to be accompanied by a kind of proactive focus on the client, and just to help them to really avail of the possibility of that services and to start to use this platform. And I think when we look at the mobile money challenge we faced on that respect, it seems to be very similar to some of the issues we discussed today. I think, whatever progress in technology and access, we need to continue to focus on clients' needs and their ability to really use those platforms. And when we talk about the challenge, we really focus today on people with disabilities. I think we need to have the same focus on helping to understand those barriers, how to overcome them, and how to make sure that the provider of those financial services internalize ways to really enable those clients to fully use the possibility offered. Here, let me just share a couple of thoughts, based on what we're discussing before about what can we do in our role as developing agencies. First, I think we need to encourage more the kind of model we heard in Uganda. I think this partnership between AMFI from the Microfinance Institution side and this association dealing with people with disabilities is very powerful, because it helps to create this understanding between, these two sides of the equation. UNCDF works in most of the countries we are, both with a number of financial service providers and with the national associations. I think if there was a way to get that kind of momentum from the association, as they are doing now, for example, on client protection, to get them to really embark more forcefully, as was done in Uganda, on that agenda, I think it would create a great opportunity for donors like us to really, and development agencies like us, to really do more about it. I also think that we need to maximize the kind of synergies and leverage between different development institutions. I know that at CDF we use a lot of grants, we can be more risky, we can invest more in preparing the ground to upscale models which would, look at those issues where an IFC would come or Regional Development Bank comes. So I think we need to work more on our complementarity on the funding side, to really make it happen.
Okay, any other questions? We're coming down to the wire now. I've got one, and to Klaus. What do you think the donor community could recommend to IFIs, international finance institutions, like the IFC of the World Bank, the Inter-American Development Bank, to bridge the financial inclusion gap?
I think I'll start the other way around. The subject that we are discussing today was actually not the subject 10 years ago. How long ago is it that Yunus and the Grameen Bank started this? It's not much more than 10 years ago. If you look at the incredible rollout that this has known across all continents and all the activities of the development banks in terms of SME finance, etc., I think we can actually say that this subject in a very short time has come to the very forefront of the whole development agenda. And so in reality, I see it as a success story. And therefore, my reply to your question is they should continue doing what they do, and we should continue to roll it out and to scale it up. But I think we have all the ingredients, and the discussion here has shown that we know how to do it, and we just have to continue and to get the buy-in from others and to make sure that also local institutions in partner countries can actually contribute to the effort. I think that's where we can still do the most.
So you're saying the glass is half full?
Exactly.
Does somebody out there say the glass is half empty? No. But, Imoni, we still have 2.7 billion people who don't have basic financial services. What more should you do?
One of the things that our new president of the World Bank Group has challenged us to do is to really focus much more on, as well as the prosperity aim in terms of our mandate of economic development and growing economies, but have a very clear poverty focus. And I think that's all we can do, is instead of, being dispersed. I mean, there are a lot of different challenges, and we need to focus on them in order of priority, but really have a very clear focus on what we can do to improve financial inclusion. And as I said, that's what we're doing by being the key administrator for the G20 SME Finance Initiative. So we're doing everything that we think we can. We're working with partners, DFIs, the private sector, donors, governments, and I'm positive. I'm being serious. It's a different. Every time you talk about inclusion, somebody brings in an aspect that you had not focused on. And for me, what I'm taking away from this is, the whole issue of inclusion. We'd focused on women and poverty, and now we're thinking a bit more. Now let's look at another aspect of people with disabilities.
Okay, we have another question here, sir.
I'm coming from Estonia, from Tallinn. I'm representing Tallinn at the European Union.
What is your name, sir?
My name is Tonu Karu, and being in disability matters since 1985. My question is that my biggest teaching when attending the World Congress in Kenya, Nairobi, in Kenyatta Center, during the visit to the rehab center of disabled children next to Thika Town, it was eye-opening. What the hell are we doing? We are just relying ourselves on technology, which is damned expensive. I've been the member of the World Commission on Technology and Accessibility since 1985, and I have seen the change of mentality, their marginal product making mainstream, even the terminology has changed. I would say it is a lot to learn from the third world, especially in the field of disabled and rehabilitation. For us, we are just trying to heal with money. It is damned wrong. And now my question, how should we solve the puzzle that maybe us as new countries, so to say, in the EU family, having never had ever any system like United Kingdom, the colonies, and the good part of the third world has been belonging to somebody. Therefore, the old ties are there. How would our public, the general public, and potential partners understand, have the information, what could we do?
No.
We might be ready.
No, thanks.
But the information doesn't come to the public to change the mentality and be our assistants. Thank you.
Okay, very good. Who would like to take that? Charlotte, perhaps.
Yeah, I mean, I think that there certainly are a huge number of good practices that are coming out of the South.
That we can learn from.
That we can learn from, particularly in the area of disability. And I think part of that has to do with the fact that there has been a strong movement of disabled people's organizations in the South. And so in many places, in many countries in the South, these DPOs have engaged with government, so they're part of influencing policy. They're part of campaigns around inclusion. Uganda is a perfect example. Brazil is a good example. South Africa is a good example. India is a good example of where persons with disabilities have been very active in the policy in developing policy frameworks. I think in order to address some of the issues that you raised, sir, you really need to have a strong civil society, and in this case, a strong movement of disabled people's organizations.
Okay, Imoni.
Yeah, your comment made me recall something I've been thinking of earlier, which is that we shouldn't let technology basically be the mechanism by which we say, oh, we've solved the problem of access of disabled people to services.
But it's a tool. It's a tool.
And we forget the human aspect. Because, for example, I'll talk a little bit about the UK health sector now, where they're very much trying to use technology to serve people at home, in their homes. And what they realized was that people actually, as well as obviously having the access to medical care, still want the human contact. So as we talk about technology as being the be-all and end-all, we need to remember that it is a tool.
Okay. Anybody else? I think we're nearing the end. Maybe what we could do is we could sum up each of us. If you could actually say, what one issue would you focus on? And that's not easy, but there are many. But what do you think the most important issue is to focus on to close that financial gap that we're looking at right now?
Starting with me? Okay. The view we have taken at the IDB is the employment link, meaning for financial inclusion. If you don't have employment, formal or informal, you don't have a stream of income. If you don't have a stream of income, formally or informally, it's much more difficult for you to get any funding. So both in general and also specifically focus on persons with disability, our focus has always been through the income link, the employment link, and that's reflected in the type of programs we do. We do both at the private sector level and also in the public sector level, like the cases of Colombia and Argentina that I mentioned here. So for me, this is a necessary but not sufficient stage or step. But that's how we've seen this working in practice, at least in the context of Latin America.
Employment.
Yeah.
Klaus, would you agree, or do you see another priority?
No, I see too many priorities, and therefore we will indeed have to see how we can optimize the use of our funds. And one of the possibilities to optimize the use of our funds is to try to use them as seed money for others to come in. So to enable other investors, other capital sources to actually come into certain areas as, for example, SME financing. So with that, we can have a leverage effect. We can maybe put 100 million into a program and get 1 billion of funds leveraged. So one of the answers for us indeed is what we call grant loan blending. That means using official public development assistance to actually enable investors to come in to markets where they otherwise would not come in.
Imoni,
no, it's just
very quickly.
Yeah, I know. Because I was going exactly that way. Reverting your question, what they should think that we should be doing. So what we think they should be doing is more or less along the lines. And we do a lot of blending with the European Union in Latin America. But the point is, because they have grants, and that's a key for any of the pilot experiments that we have. Without grants, it's very difficult. So we can use their money in combination with ours for the piloting, and then our money, which is the biggest financing, for the scaling up. I mean, that would be a nice division of labor, I think. Okay.
Imoni, the seed money sounds quite familiar because the IFC invested about $20 billion last year in seed money, essentially. Many of them, anyway.
Yes, but that was fully profitable seed money. But we're very happy if the European Union would like to partner with us with less fully commercial seed money. Our focus will continue to be on SMEs generally, in terms of both the capacity building and the access, and we measure these very, very clearly. We have these IFC development goals where we are actually measuring ourselves in terms of an aspiration as to the amount of access to finance that we would like our clients to provide to women, the agricultural sector, rural communities, and the poor in middle-income countries. And so these are the areas that we have been focusing on, and I think we will continue to do for the near future.
Charlotte, what is the one issue do you think should be the priority issue that should be dealt with?
So I think the priority area should be to deliberately mainstream disability into all aspects of financial services, to continue the dialogue. And I think by continuing the dialogue, which already has started, as I mentioned earlier on, I think we can work towards creating a culture of inclusion for all.
Flavia.
I think the one thing that I think should be done is to aim at attitude change. With the right attitude, everything else that we've been talking about here will follow. Attitude change at all levels, be it at investor level, be it at service provision level, because then disability issues will be on the agendas at all levels, and the planning then will be able to integrate disability. So attitude change is the one key thing I still think about.
Henri.
Everything has been said. How to be last? No, just one thought.
Because I missed the beginning.
You know, what's interesting is we see a lot of commitment from government as part of the G20 agenda around financial inclusion. So you have more and more national strategies on financial inclusion. At the same time, the driver of financial inclusion have become much more complex with new players, new technologies, new frameworks, agent banking, mobile money, etc. I think a role that we can play, if I think of UNCDF, is to help set up national platform which can really drive that agenda and expand the range of stakeholders around those platforms. What's striking is it's no longer a conversation between the central bank and Ministry of Finance. It needs to involve the Ministry of Telecommunication, Ministry of Welfare issues, Ministry of Agriculture, because some of the key drivers on financial access are related to some of those mandates as well. So I would say useful role for organizations like development agencies or donors is to help set up those national platforms, help encourage lateral learning. I think when countries learn from each other, it's a very powerful mechanism to push an agenda. We have seen that with the work of the Alliance for Financial Inclusion, for example. And then really use seed money, whether it's grant, concessional loans, in order to have a catalytic effect. And I fully kind of agree with what was said before. I think trying to put everything we do with a very strong focus on leverage, and do that in a way which also encourage exploring new models, new areas, changing attitude, creating the right incentive for players to really address some of the issues which haven't been fully addressed, like the one that we talked tonight. Thank you.
There's a lot of will, a lot of energy, a lot of money that is backing this effort, and our panelists are representing this. This discussion today, I think, helped to show really the symbiosis between the policymakers and the development banks and the people on the ground dealing with the situation. Hopefully, we got a headline or two, or somebody at least found this fulfilling enough to see that there is, of course, a lot of room left to do. We still have 2.7 billion people to try to close this financial gap for 2.7 billion people. And I hope this was in some way a way to shed more light on that. And let's give a hand to the panel. And if you have any further questions, please feel free. Don't be bashful. They would love to speak to you. Thank you very much.